Hello and welcome back to Coinscrum Markets for our Friday wrap. Here we are again with Nick Mancini, Chief Community Officer at Trade the Chain. Hello, Nick.
Hey, how's it going? Happy Friday.
Happy Friday to you. Hope you're avoiding extreme weather conditions over there in the US.
Yes, I am. Fortunately, I'm in Colorado, so no tornadoes or hurricanes or anything like that. But we will probably be dealing with an interesting snow season this year. So safe for now. Thank you.
Yeah, well, look, some horrendous pictures there on the news. So I hope that all kind of calms down for everyone and things get back to normal. But here we are to review the crypto markets this week. We'll kick off by just looking at any news highlights that have crossed your desk. What's standing out?
Yeah, so some of the big news drivers, and it's been kind of a lull, just in terms of just kind of in your face, very important kind of, let's say, news driving or market driving news. So I think the biggest one that kind of made a lot of waves this week was FTX bought Ledger X. And the biggest thing about that is that means that they can now, that they're basically CFTC certified, which allows them to trade commodities and other things like that. So FTX is slowly inching towards what I'm telling people as basically a combination of Goldman Sachs and the New York Stock Exchange. They control every single aspect from trade inception to trade execution. Whereas New York Stock Exchange and Goldman work with hundreds of intermediaries to facilitate transactions in their services. So FTX is basically a full stack business that covers an exchange portion as well as asset and wealth management, and that it will soon grow. So it's very just interesting to see FTX slowly build out their infrastructure. And I believe they are only 30% behind in terms of Coinbase trading volume, which is not too large of a gap if you think about what the next 6 months may look like. So definitely watch out for FTX moving forward. They are a dark horse and maybe crypto leaders soon.
Mm-hmm. Yeah, oh look, they've been very aggressive. Ledger X have been around for a long time. They got out the tracks very early to go down the regulatory route. They got their swap execution facility or SEF license a number of years ago now, and in many ways they were very early to the game, and obviously we've seen kind of more pickup on the regulated future side with the CME contracts, but that looks like a really good deal. Definitely going to fast track FTX in terms of their regulated offerings over there in the US. So yeah, I think they're going to continue to grow and go from strength to strength. Old Sam BF smashing it out of the park. So on the regulatory side, I guess this is we've discussed this in recent weeks. Personally, I think we're still relatively early days of seeing this sort of regulatory tightening going on now. I mean, it was inevitable given the size of the market or how big the market has become, not only on the centralized venues, but now obviously on DeFi. Taking it to new extremes. I think the DeFi community and I think the main players have known that they need to be ahead of the curve, and the likes of Aave and Uniswap have been kind of slowly building and starting to roll out their permissioned walled gardens, I guess, or versions, optional permissioned components or modules to allow people, if they need to trade compliantly, that they'll be able to do so. But this is something I guess we've seen in the news this week as well, just today.
Yeah, so as soon as I woke up this morning, which is quite early Denver time, I was hit with the news that the SEC had opened up a probe into Uniswap specifically. That was kind of the big headline and maybe the one that they really wanted to hit on the bullseye. But other DeFi lending services are under the umbrella of the probe right now. So you are 100% correct. We did see Aave. I believe I think we saw Curve, maybe one or two other lending services open up institutional arms. So like you said, permissioned, a lot more security, a lot more controls, a lot more visibility. But we've also, we have a massive retail boom as well. And many on both sides of the aisle, some say, DeFi has to be regulated because, we don't know if there's money laundering or what's going on. Other side of the aisle is you can't regulate DeFi. It's decentralized. The idea of it is that there is no regulation, there is no party to do it. So how they meet in the middle is going to be very interesting. And how the SEC enforces something like this is also going to be very interesting, considering there is no centralized governing body. So we're going to be coming up on a lot of firsts in terms of these regulatory battles. A probe is not necessarily a bad thing. It did negatively affect Uniswap's sentiment and price immediately, but not too much. I think maybe a percentage or two. You know, usually if we see in terms of bearish crypto market news, that's a blip. So watching this closely, but clearly the SEC is sending signals to the cryptocurrency industry that we may not be safe, you know, for long. So,
yeah, well, I mean, I think, you know, we mentioned FTX, they're pursuing the regulatory path, I guess, doing things as maybe you expect they should be.
Yep.
On the
better than Binance.
Yeah, we saw the goings on with BitMEX last year, a little bit with Binance, well, a number of things with Binance over the last year as well, and kind of the approach of those owners who were looking to maybe assume that they could not be captured by regulation anywhere, and kind of finding out that to be sort of a bit of a wishful thinking. So I think Binance in the news again, aren't they?
Yeah, so yeah, we've talked about this before, and regulatory proactivity is certainly helpful, and the regulators like it, as do customers who use your products. And speaking of that, so we heard basically this is the kind of the same thing that happened in the UK with Binance, where the UK allowed services to continue, or trading services to continue, but they're basically, the big warning label was slapped on that this is entirely unregulated and we still need information. So Singapore did what the UK did last month. So basically Binance has a giant warning label that they're labeled, you know, without having certain, and I'm not an expert in Singaporean financial law, so apologies if I botch this, but basically Binance has a warning label. You can still buy and trade. There are certain restrictions that are added on, and they need to bring on or actually, you know, file certain regulatory things to actually reach the regulated status in Singapore. So we are seeing the globe slowly but surely kind of reprimand Binance. And actually, within the same day of this news happening, CZ announced that Binance wanted to IPO in 3 years. Right. Meaning if you wanted to IPO in 3 years, they would probably have to do it on the US markets or the Hong Kong markets. I doubt they would do it in China, and they have to get a lot of stuff together. So it'll be very interesting to see how Binance buttons up over the next 3 years to actually reach an IPO, which is no easy task in today's world. So,
okay. Right. Well, look, let's see how this has affected sentiment, if at all. I'm not sure any of this has affected sentiment at all. But, you called out some key levels last week, which we'll come and look at in a bit, because I think, you made some very good calls there. But let's start off with this Bitcoin sentiment chart.
Yep.
See how that's
we did say Uniswap price and sentiment dropped a little bit. We're not going to cover that because the news literally broke 2 hours ago. So we'll discuss next week what is happening with Uniswap and how that affects price and sentiment. It's too early to call exactly, but obviously Uniswap's not a clear buy. So back to Bitcoin sentiment, like you said. So towards the end of the week, things looked a lot bullish, or a lot more bullish. So you can see, if you look at the price chart there, I was watching this very closely. We had a double bottom, and that double bottom led us to an increased sentiment as well as increased price. So we went from about, 47K to, I think we're tipping around 50K right now. So I covered this a few weeks back. When there's a dearth or lack of news driving sentiment, driving price action, driving interest, the market generally turns to technical indicators, and that becomes the news driver without some sort of fundamental push. So because there was really a lack of fundamentals and price action just looked a little bearish after a bullish boost last weekend, which we predicted, it kind of came down, and Monday has just been a bad day for I don't know how many months. Monday's just been red. So we saw some red on Monday. It continued into Wednesday. We had a nice pickup. I went long around 47K. I've continued to have not closed my trade. And I'm very happy with current price action. And to see sentiment, daily sentiment bullish for 2.5, 3 days straight going into the weekend, Every time we've seen that pattern since we've been talking, Paul, we have seen Bitcoin continue to be bullish into the weekend. We've not seen a flip like that until about a Monday or late Sunday. So based off this data, trading volumes up 27%, tweets are up nearly 13%, and price is just cracking 50K as we're going into a Labor Day weekend, which is going to be likely lower volume on the US. I'm thinking that someone could push Bitcoin into interesting price levels beyond 50K this week, and we'll discuss sentiment or technicals in a little bit.
Okay, cool. And what about our other favorite token to review, Ethereum?
Yes, the ETF of ERC20 token. So just off the bat, we had a kind of a massive dip in sentiment earlier in the week. This was a bit more of an anomaly. I think it was just related to some price action. We also saw massive altcoin increases that were outside of Ethereum in the middle of the week as well. So you saw Luna, you saw Sol, you saw ADA, you saw AVAX, you saw DOT. All of this pulls attention away from the second largest asset. And anytime, whenever sentiment is more or less bullish and obviously price action is followed, you see a blip like this, you look for anomalies, and that anomaly was literally 10 other L1s getting attention. And when that happens, you generally see the Twitter army say Ethereum sucks, AVAX is going to take over the world, Sol is the best chain. So whenever that starts happening, we start to get an interesting coalescence of negative Twitter action towards, I guess, the competing assets of the ones that are pumping. So we're seeing basically a 5, 6, call it 7 days straight daily sentiment if you want. Ethereum price has already risen in the week. I believe it just tipped 4K or is getting extremely close to 4K. It was 3958 when I took this picture. So very close to 4K right now. Like I said, we have daily sentiment and bullish territories for more than 3-4 days straight. It would shock me to see Ethereum decrease and flip bearish this weekend. So that's, like I said before, plus 16.5% trading volume, plus 20% Twitter volume. These are the signs you like to see going into a weekend when volume is likely to be a little bit more lackluster during a US holiday. So,
okay, right. How does this all translate into the technicals? Let's start with Bitcoin.
Yeah, so Bitcoin, I think we've been talking about this trading channel since its inception. This is quite fascinating to just have so many weeks of just such tight-knit price action. So last week we said if it didn't break the center of the trading range, it would come back down towards the bottom of the trading range, more than likely towards one of the moving averages. That's pretty much exactly what it did throughout the week. It was a lot more tighter than we expected, although we did have the boost throughout the weekend. So right now with bullish daily sentiment, the technicals are a little bit overbought. But again, if we have low volume, it's a lot easier to push things around. So in the most bullish scenario, Bitcoin finally breaks the center of the trading range, which it has been rejected for twice in the past, 2 weeks. We also kind of have a mini head and shoulders sitting on the price chart right there. So if we break up and flip the center of the trading range into support, we will most likely continue towards the top of the trading range throughout the week. But if we cannot break the center of the trading range this weekend or early next week, we will likely head back down to the bottom of the trading range for hopefully another bounce to then propel us back up. Basically, this trading range has kind of more or less been the Bitcoin price action gospel. So I don't expect it to break anytime soon, but I do expect the center of the trading range to be key resistance and then hopefully support if that resistance is broken. Now, if the trading range completely fails and I am 100% wrong, we're going to look for the 200 moving average on the 4-hour charts to be support, which would be around 46K, like high 45K areas. So that is what to look for. I'm bullish, but also watch out for the orange arrow scenario. And I think red is entirely unlikely, but is there in case something bad happens.
Okay, we will come back and review those predictions for next week. And how about Ethereum?
Yeah, so Ethereum, if you follow my Twitter, please, if you don't follow my Twitter, at Mancini, please do. I tweeted out earlier this week, as well as put in the Trade the Chain community, that on the August 31st, that Ethereum looked destined to go to 4K. That was when Ethereum was just sitting in that trading range that Paul and I had been talking about for the past few weeks as well. So fortunately, Ethereum busted through that trading range and is now very close to 4K, which was my initial prediction. I've closed my trade now. I'm not comfortable trading, these levels when I've made some good money. But I do not think that it is completely out of bounds to think that Ethereum might hike up to 4,200 in the near term to at least get to where previous resistance was, or all-time highs. So I don't think we break all-time highs anytime soon. I mean, we did see crazier stuff with Sol, AVAX, DOTS, whatever you want to say, but Ethereum is the second largest asset, and it takes a lot of money to push this bad boy around. So I think 4,200, if you really wanted to get crazy, look for that. I will probably be looking to buy more, maybe around this level after we see how it reacts to 42K. So watch out for that, but still very bullish on Ethereum moving forward, but potentially watch for a flash crash, a correction, a quick kind of wonky market play that could push Ethereum around as soon as it gets to these low 4K levels, because as soon as that happens, low volume means volatility. So people can push Ethereum around a lot. So just be careful if you decide to trade that this weekend, although it does look very enticing.
Yeah, I guess, well, the type of news that we saw today with the SEC taking a look at Uniswap, as we spoke about earlier, this is the sort of thing, if like all of a sudden they get a little bit more heavy-handed and start looking more broadly, maybe that's the type of news that could cause that kind of sharp sell-off. So definitely keep your fingers on your mouses out there, just in case.
Certainly.
Don't step away from your screens, ever. So the things we've been keeping close attention on is around these dominance charts, which we're going to move on to now, starting off with the Bitcoin one. I mean, this whole summer rally, Bitcoin has been lagging quite clearly. We've mentioned some of these other altcoins, which have already made new all-time highs. And let's see how that's reflected in these dominance charts. Let's start off with Bitcoin.
Yeah, so we've been covering this since you can see that head and shoulders that was forming throughout June, July, and August. Last week, we were on the support level that is one above where we're sitting now. So last week, basically, Bitcoin dominance was sitting right around 44%. And the big question we were asking was, will it drop lower? And if it does, what does that mean for the rest of the market? So last week, we basically said if Bitcoin dominance continues to drop, Ethereum and altcoins get the bulk of the runs. That's exactly what happened this week. So right now, we're sitting at, what is this, about 41.63%. So around 41, 42% is where we're at for Bitcoin dominance now. Now, if I'm looking at this chart, I'm trading this chart. We're reaching support after a pretty steep drop, and Bitcoin does look a little bullish going into the weekend. Now, I am not going to go short right at resistance here because I don't think Bitcoin is immediately going to break through. Now, we can't go short or go long on this asset anyway, but we're just thinking about how we're going to approach the markets when we know that Bitcoin is looking a little strong as Bitcoin dominance is touching support. So whenever things touch support, they generally at least try to bounce more often than not, unless the asset has, the SEC is quite literally suing you and going to take you to jail. So for me right here, I'm watching and observing and just saying, if Bitcoin dominance breaks down, I will probably buy more Ethereum and altcoins. But for the time being, since it's on support, I think a good play might be a Bitcoin trade this weekend as this whole other news coalesces. So it's not saying that's guaranteed, but I currently am long Bitcoin. And I do believe that this weekend will be better for Bitcoin than it has been recently, and that this dominance may show a support bounce, at least of some sorts, over the next few days before heading lower if that happens. So that's how I'm looking at this chart. But I do think that Bitcoin dominance will eventually continue at least to the third support level throughout Q3, if not Q4.
Okay. Right. So where's it all going? Where's it all going? Who's winning? Who's losing elsewhere? Let's start off with Ethereum.
Yeah, so Ethereum, if you'll recall last week, I mean, we were sitting right at that support, or kind of the lower bound of the ascending triangle formation. I even drew a support line to show where it would go if it broke last week. And it did. It literally went in the quite opposite direction at a, what angle is that? A 80-degree angle, 90 or something, it's straight up.
9.5 degrees.
Yeah, seriously, if you're, I mean, you could design a building around that. So we are nearing resistance now. And like I said, thinking about Bitcoin support and resistance, sometimes you do want to go long resistance, but it's generally wiser to let it play out before you make a decision. So here, I do think, like I said, Ethereum might get to 4,200. If it does, I would expect that dominance level to touch the very top of resistance. But I don't expect Ethereum to bust through 4.2K and continue to 5K without some serious market forces behind it. So could Ethereum dominance break 20.5% and fly up? Certainly. Does it look likely based on the charts and other market factors? Not currently. So I expect Ethereum to kind of take a dip back like it has in the previous patterns, but that does not mean that's guaranteed. So 100% keep a close eye on Ethereum dominance as it creeps towards 4,200. And then obviously keep a close eye on Bitcoin as it creeps past 50K. Mm-hmm. So right now, best trade in my book, Bitcoin over Ethereum, but I could be wrong. And you may want to play these charts completely differently. And that's why they're here for you.
Mm-hmm. Well, they've both gone from one extreme to the other within a week. Bitcoin dropping to the next support, sitting right on it. Ethereum going straight up to the key resistance, sitting right on it. So yeah, I guess your call in favor of more Bitcoin strength makes a lot of sense. We will see. Time will tell. Well, when we looked last week, it was it wasn't really Ethereum that had been kind of, picking up the pieces from Bitcoin. It was really all around the alts. Obviously, that's changed this week with Ethereum showing a lot of strength. But let's finish up by looking at the others' dominance charts, everything else out there.
Yeah, so the question we asked ourselves last week was, if Bitcoin and Ethereum dominance are decreasing, where is that money going? And the chart is 100% answered here with others' dominance. So others' dominance covers the cryptocurrency dominance of altcoins outside of the Bitcoin and Ethereum ecosystem. So think ADA, AVAX, Sol, DOT, a lot of those big ones that I've named, plus all the other ones that I can't think of or literally don't know. So what we saw last week was a bounce on I believe that is the 50 MA. Mm-hmm. So it bounced on the 50 MA, and we basically drew the bull flag that still stands. And I said, if it continues to go back towards the resistance, we expect it will likely break through and we will see a resurgence of altcoins. Now, we did not see it completely break through, but what I'm seeing now could be classified as, a very ugly bull flag, potentially a very ugly inverse head and shoulders. Either way, this is not a technically bearish formation, but it's not overly bullish either. So I'm cautiously optimistic that we will see alt season soon. Could we see another dip back to that confluence of moving averages where we see the 150 and 200 moving average sitting together? Yes, 100% it could, especially if Bitcoin dominance gains a percent and kind of kicks everything back into reset mode. That wouldn't be the worst thing ever. We did see crazy valuations come out from a lot of big cap L1, L2 coins. So am I putting all of my money into altcoins right now like I was last week? No. Like I said, I do like the Bitcoin trade over the weekend. Does not mean that ADA, Sol, AVAX might have a big boost if things go well over the weekend. But I do think that Bitcoin looks the healthiest, at least towards Monday, when we get that general red market reset. So right now, I'm cautiously optimistic on altcoins, but I think at least in the 1 to 3 day timeline, Bitcoin may be sexier, but if you're not that type of trader and you're going on a vacation for Labor Day, maybe check back Monday with a pile of cash and just check out the dominance levels before you re-enter the market. That might be a really good idea to at least give yourself the assessment to say, how strong do things look for the next week or for the next month? So that's what I would do.
Yep. Okay. Well, you've been on a good run, Nick. So not to be completely dismissed, any of your calls at the moment. I think we need to start keeping a scoreboard actually, because you're on a roll.
I think so too.
But you know, there might be some blips along the way. But I think you've made some valid arguments here. There's some key, you know, resting around key technical levels, and all three cases kind of make sense to me. But you know, we will only know for sure in hindsight, and we will look at these in hindsight when we meet again next Friday. You and all of your fellow American viewers, or our fellow American viewers out there, wishing you an amazing Labor Day weekend. Enjoy the rest. Try and have a little break from the screens, but not too much because anything could happen.
Certainly, and I think this is all educational purposes only. So this is just for you guys to learn, and I will try my best to stay away from the charts this weekend and take a little relaxation, Paul. I hope you do the same.
It's not going to happen. You're going to have a screen propped up against your barbecue. We know it.
Checking charts while you're you know, talking to family members and all that.
You have a good one, Nick. See you next week.
You too. Have a good one, Paul. Bye.